Hello, live stream, mic check. Is it possible to hear me? I think the latency is kind of a lot, so I just wanted to check that. So this year I want to do a lot of live streams. Yeah, so um I made a promise last year that I was gonna I was gonna be doing a lot of live streaming this year, and I just wanted to check the system if it was working properly. And I missed this one actually. Um, Based on the 4 hour time frame, I was kind of expecting that to be bullish, but then my count was actually in line, and I placed this line here. But before I could begin the stream, I missed the opportunity, but that's okay. There's always another. So what we'll be doing this year is basically just watching candles behavior and predicting their movement. um, Even into the future, we'll be applying convergence and divergence live, and we'll also have fun with we'll try to get basic knowledge of how market rhythm and market vibration is done. We have a lot to cover in terms of um in terms of, let's just say, running or reading the tape. So I want to do more of that with you guys this year. That is reading the tape live, basically predicting every candle's movement if possible, um, to be able to show you how you can do this and how you can easily um, run your trading journey on easy and on soft. As people like to say, you do it on soft. Okay, it's possible. It's very possible, but you have to be systematic and disciplined, and to a certain degree, extremely time sensitive, because what this market is, it's just time based. It's scripted to run based on time in its operation. I teach you how to read price like everyone else, but the thing that will give you the greatest edge would be the time component. Okay, and that's one thing that I think you have to go into study to find out. But this year, I will do my live reading, my live tape reading, and I would just do it basically primarily talking about things that I already know but can't teach publicly. So you would see me read candles, but I won't be able to tell you why my expectations are for this and why it pans out and why it doesn't. You would see my executions on a demo. I would never trade live in a live account on YouTube because I don't want to actually, um, I don't want to excite anyone into taking similar trades. And thank God for the latency. So I'll be like a lot, a lot of minutes um, earlier than you guys would get the signal to want to buy or sell, you know. So yeah, because of the latency, I can flex a bit. I know that you would receive my voice or my instruction at least a few seconds. I think I didn't actually count it, so I think I'll do that later. Let me play this session and see. Okay, so if I were to speak right now, um, So I think it takes basically 30 to 40 seconds by my count. I think the latency is quite wide. I wanted it to be instantaneous, but this is what I gotta work with for now. So I was aiming for 5 o'clock right here, 1700. I wanted to see I wanted to see this price movement run higher, you know. Um, so my expectation was at exactly this hour I would start to hunt for this movement here to target this guy right here. Sorry about that. So in BTC, what you need to know is the principle of how you get to read this, how you can um, how you can get to basically check out what move comes next. It's a principle that I teach known as um, vibration. And a lot of my students would know what I mean or what I'm referring to by now. Um, it's a simple principle of vibration. And what that is a mathematical it's a mathematical system that gives you um, the market's intent before they happen. That is to say, there are future projections that you already know. That point is going to incite or create a form of movement in the expected direction that you are kind of like anticipating. Okay, so it it just simply gives you an edge. It helps you to understand markets fluctuation and bounce points, points where certain movements would likely occur and points where certain movements would likely fail. Take for example, um, if you're watching this candle right around 5 o'clock, um, rhythm, as I taught it in the YouTube channel where I dropped a video, I think. I don't know if I can actually maybe get a link to the video right now. Um, Let me try getting my YouTube channel up. No, most likely. I don't think um I don't think I don't have the time to do that right now. So I'll just probably just tell you the name of the video. Okay. It's when you go to my channel, you would find a video there saying introduction to CAD counting. And I did market rhythm by par, a little bit of it, not much. And I showed how you could I just made it and I called it an introduction to cat counting, right? It's I think having like at least 16 likes. It doesn't have a lot of traction to it, but that's where you begin is by understanding what arcs are, what the market arcs are, and what backward arcs would look like this, right? And what they are known as is that we call them market bell curves. I call them market bell curves. So these are bell curves. So when you see a larger bell curve creating a smaller one, like in this case, the expected price movement will be that we should see this pan out right here. So if you had backward bell curve and it does another forward bell curve, your entry point will be the next candle after the end of the bell curve, right? So backward arc equals forward arc. It's that simple in its approach. Now, I knew that this movement was going to begin right here based on a time in the marketplace. you can actually time these markets. I know it's it's not a very simple thing to do, right? But this right here is a good candle print. I like to see this. It signals a lot of um possibilities in terms of bounce point when you're reading price and you have a rhythm. We're currently in a rhythm of two, right? And you see that. Now your confirmation would be that if this candle should close in a black, then that's a very, very good sign that we're going to continue upward. But if it closes at a green, I would want the green to be as powerful enough as to close above this guy. And that's just basically reading price action based on the current rhythm. But this current flow is questionable because it just made something known as a downward arc. So I love to read price action this way. I would have loved to see if this close would be around up here. This would have been a good sign. But at this point, I'm not so confident in the higher price movement anymore. Um, I wanted different laws to extensions and laws to how candles should present themselves. There are degrees and measures to how they should present certain form of volatility if a continuation is to be expected. But these fast drop is not a good sign when you are in a rhythm of continuity, but then there's a break in rhythm that creates that creates an opposing movement from your previous anticipation of the market go in a certain direction. So that move might appear questionable at that point, and now your projection changes to a forward arc, right? So that is that is one thing. I'm trying so hard to retain informations. I'm I'm kind of itching to mark the charts, but I don't know how to do that without actually revealing most of the things I'm not supposed to teach on this platform. So I'm really itching to say a lot of things, but I don't know how to hold back. I might end up just revealing a lot of things this night. So you might see bounce points as points or regions of um let's just say how I'm able to describe this without laying the secrets out. I would say bounce points are points where math meets time, and that's that's what makes your bounce point solid, where the mathematical calculated bounce meets a specific time, and that time is also um let's just say kind of I don't really know what would I say, that time should also be in alignment with the I don't know how to say without spilling it out, but listen, there's a price counting within this region that when you mark them precisely, yeah, between this region, when it comes from the right hand side and this guy right here comes from the left hand side, that is to say, you count from previous data and then price also aligns and also time down here aligns perfectly. You have one of the best entry models when you align all three, your previous data in terms of candle counting, and then price and time. So when you align all three of them, those are your best high probability trading scenarios, right? So I already told you that my anticipation was to catch the Judas of this candle going downward based on a rhythm that is presenting itself on the 4 hour time frame, right? But look, there's a rhythm here that I'm so dying to teach, but I don't know how to teach it without breaking my students' heart because they paid for that information. And I'm kind of trying to hold back. So I think what I'll do is just go down to the 5 minutes time frame and just read candles. Okay. This is this is what I'll just use my time to do. Okay. So um students, you know that within this region there is what we know as the Pinocchio, and it's already presented a number of candles. Okay. So our anticipation is that if we are to continue upward, that number of candles should present itself also in the opposing direction, right? So if we've actually had that, then our expectations will be we're continuing. We haven't ended this move yet. Okay. So even the 5 minutes, our anticipation haven't changed. What do we expect on the lower time frame downward? This guy right here should push higher, right? Yeah. So unless there is a fill, we should see that this guy should remain volatile and green to the upward side. And it's just the basic law or principle of the market rhythm that we've already known and loved. Okay. So in order for me not to get to talk a lot, I'm interested in seeing what size this candle closes at because that's important. Oh, that's not good. I don't like the size of that. No, 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 no. I'll mark this as a point of a new count, and you know the reason why. Okay, now let's go back to the 5 minutes time frame. This guy right here. Okay, we had. Please hold on. I'm trying to count. This is not a good sign for continuation upward. It's not a good sign. The only thing that would make me change my perspective if this candle closes above this candle right here, or at least in the midst of it around here, or else my projection for an upward price movement ends completely. Until yeah, so the count is this is what we know in the group as a failed rhythm. I'm sure you guys are aware of this by now, or else if this was a rhythm that was progressive, we should have seen an extension that goes up and closes at least in the midpoint of this candle or run past it. But we didn't see that. So what does that mean? It means this is the entry point, but in the opposing direction of the move. So this candle closing small, that's a signal. So, um, well, I think for this first part, it was just a trial video to see how our live session or live trading sessions would be in the future. And I intend to use BTC all the time, but not always. Anyways, I don't think reading just BTC is gonna be fun for those people who read like the forex market and who utilize like gold and us other stuff. So I think some of the sessions we might talk about gold, some sessions we might talk about silver, some sessions we might talk about um the indices. And I don't do a lot of forex, but it also works there. So anything at all goes. So all the instruments use the same rhythm vibration laws. So it's nothing major. So as you can see, this guy right here failed, but it failed after what count? And where did we begin the count? That's what I want you guys to pay attention to. Okay. And what are expectations when that count repeats? These are the questions that you should be having in your mind. Remember the 5 minutes time frame. Okay. If this maintains its flow but does not cross this candle right here, even by week, if it doesn't cross this candle right here by week, but rather this candle continues and maintains this upward movement, maybe closes around here, then I'm not totally giving up on the movement of high price action quite yet. But if it goes down and taps into this guy and even goes below it, and then maybe the candle closes and it closes right below this candle right here, then that break in rhythm that happened on the lower time frame will be sustained to the downside. This I love to see. This right here, I love to see. When it pushes, taps into this guy and acts like a rocket and just go higher. That's what I love to see. But when it runs down and closes, that's not fun at all. I would change my bias, you know. So this candle is a major decision point. This candle. And there we have it. All I want to see right now is that we had, okay, I can't say that. I can't say that. How do I explain? Well, this right here was our expectations, our expectation on the upside. On the hourly, we've closed and began anew. So, guess what? We've changed trajectory. And I don't know how to describe this and why this is happening, but um, let's just stick to the stuff that are easy to read, and that's the nature of the candles. Okay, so this is a new hour. We're done with the previous hour. This right here ended the movement on the, so we are right on time for another new price leg. That is to say, we're beginning a new candle, right? So this candle began right here, went lower, but then didn't go high by far. Came back, closed around here. This candle right here. All right. So, what are some of the things we saw from the previous candle? The open, the low, and the high. So these are important things we need to mark out. Now, on the hourly, I'm not totally bullish about the next candle. I'm not. I'm not. There is a reason why I said I'm not, because I'm waiting for a certain condition to be met around the 15 minutes time frame before I can actually say that. But I'm totally bearish on this candle. I don't want to see. I wanted this candle to close as a black candle, but I already knew that it would want to present that, and so I'm completely bearish on the next one. And the reason is because I was anticipating that when this candle goes down here, it should push higher, and this one should continue, but it didn't. So what are my expectations now? My expectations have changed, and it's all because of this guy right here. Just because of this guy right here. So you get a very sweet, genuine signal by the lower time frame on what the higher time frame is intending to do. And it's it's more like a thing that once if you've actually learned to read over time, you would just know by default. Now on the hourly, we all know by counting that we're in a rhythm of presentable twos, literally twos, right? If this candle had a smaller body than it actually did, like it chopped quite a lot and then went down and closed by this, then this movement downward would have been met with a fast movement upward and it would have torn through this. I haven't read the 4 hour time frame properly, probably should check that out. Okay. All right, so this is the last hour. I would want maybe for this guy to come down and close, maybe bearishly within the hour. If it does, then I would consider that the upward price movement might still continue on the next candle being green. But if it closes as green, then I'm not so bullish on BTC in the coming candle. So I just want to watch for what the 1 hour would do in agreement to that. If the 1 hour complements that, if it agrees with it, then I know that my trades on the lower time frame will be easy. Okay, it'll be just easy runs. I'll just wait for the opposing direction and utilize that. So these are the ways I employ CAD counting. So let's look at this guy right here. What am I reading? What am I reading? So we had failed right here. Okay. This is the facade. This is a facade. I'm trying to read what the lower time frame is saying. Let me get it. Right. Okay. All right, I'm in sync now. Okay. All right. So this is this right here. Is 2. I'm trying to use vibration, so I'm going back to my calculator for um, an easy fix to try to define where our next anticipated point of bounce would most likely occur. So um, I want to stick with the 1 hour time frame. Okay. I really wanted to see this guy be a bit shorter than he is actually right now. So I'll be very bullish about it, but I didn't get that. So I'm not fully confident of a bullish price movement at all. So I'm trying to read this as fast as I can, but so far trying to catch what everything is doing. Okay, so this is 6. Remember, from the previous Pinocchio you can spot around here, there was a count of 6. And watch how the candle closed. Every card counter should know this. Every card counter should know this. So you guys know what exactly to expect to the upside. And the 15 minutes kind of gave me a better understanding of what the 1 hour is gonna do. So now I'm fully bullish. Fully. I want this guy to close above, not beneath, above. I really want to see it close above this candle. This rhythm of 3 maintains its flow for a very long time. I really want to see you close above that guy. I don't like that, but it's still haven't broken my expectations yet. So if this guy gets to be black, I'm fine with it. I'm still bullish. If it runs through and just keeps going, I'm still fine with it. But the best case scenario for it to be the model I taught in the last quarter of last year, um, for it to be that model, this guy has to be black. Okay. And I'll be dropping you guys who have another video on true divergence today. And I expect that you guys should probably give that a long watch and study it quite well, because that would be the best explanation of how reversals begin. So if you can watch that video carefully, you'd see exactly how you have a good understanding of how to catch tops and bottoms for every move. Okay, and I made sure it was elaborate. I promise it wouldn't be as confusing as the rest. So you don't have to beat around wondering what I'm doing. But understand that almost everything I do is calculated, and I don't throw things out unless I'm very sure of them, and unless I've utilized them a couple times and have made good good amount of money trading that system. So when I teach, I expect that you guys should study it. I gave a homework assignment on that video, and I expect it to be done by all of you, all 20 of you guys. So I think there's only 13 more slots left in the mentorship until we're 33, and then we're finally closed. Like no more teaching, like for good. And the reason why I'm teaching you guys the basics of this methodology of trading is because I want you guys to go into YouTube and stream your entries also. You can play around with this information as much as you want. It's very simple. And what we do is just count the candles and wait in anticipation of where turns are gonna occur. I kind of, I kind of am a big fan of keeping things mysterious. Okay, and um, Well, now we are at a point where we can begin to use vibration because curve, our first bell curve have been presented. So this is our use of vibration, as I have always stated, is that you have to wait and anticipate when the first obvious curve, and I told you, do not use 2 as your point of using the mathematical formula. It won't give you a good. Your best chances are to begin from 5 upward. Any value less than 5 won't give you a perfect curve. All right. So this right here is a count of 1, 2, 3, 4, 5, 6, 7. So we have 7 right here. That's a good thing. Okay. By my count, our generated constant is now 9. And you guys know why the next expectation is 9. I don't have to explain why. So if you had 7, your next retracement will be 9. And you know how we got that value. Now, what will be your next value after 9? Let me do the computation right here. 12. 12 right here. That will be your point of re-entry according to the computation. And I'm very sure all of you already knew how we generate sequences, right? Our next 12, 13, 14. This is our next part right here. 14. These are the ways we generate sequences. And you guys are aware of how we do this. So what why I'm making this stream live is because I I intend to teach this, right? Um to YouTube viewers also, but in a manner that only very brilliant and intelligent people can easily catch it. People who are very, very good and understand the basic principles of mathematics. Okay. Now, this value is one of the numbers I teach, which is 13. And most of the tops are formed around 13, most of the bottoms too. So it's a point of rejection, it's a number of rejection. Okay. So 14, which is our next vibration point, should determine what direction we're expecting this entire viral movement to pan out to be. So this is a decision point. Okay. Not 13, but this 14 because it's an our generated sequence, right? Next point is 18. This is our next point. Okay. So this is the point we should anticipate and see. That's the next bounce point. That's the next generated sequence. Um, 18 brought it lower. 14 gave us a green. It's anticipated, but I was expecting it to blow past this if we're ever gonna go up. Okay. So that's our next bounce point. It's exactly around 14. Let's see. I'm still generating. Remember, we stop generating when we get to 33, right? So Now 18 right here. I'm still calculating, sorry. So it might take a while. All right. So as you can see, our exact next bounce began at 14, which is perfect. Um, 18. I'm trying to do the math, but it's not mathing right now. It happens sometimes. 18. Okay, our next value is 23.4, which is good. 18, 19, 20, 21, 22, 23, right? So this is 23. Our next bounce point should be here. So what we would have as a sequence would be 1, 7, 14, 18, which would be this guy right here, and 23. Okay, so this would be our arranged sequence for future price expectations or future bounce points. Okay, 18 is the next candle out, and I would want to see that also serve as a very good bounce point, just as this guy, just as this guy right here, just as this guy did. So 23 would be our next bounce point, and let me do the math for the next one until we get to 33. So we have 18, 23, 24, 25, 26, 27, 28, 29, and then, yeah, our next value will be 831. 1831, sorry about that. 1831, all right? And that number would be 29. I'm still calculating to make sure I don't miss a thing. 1831 right here. And our next number should be 29. Okay. And we don't have to count, so 33. We just have to do 29, 30, 31, 32, and then 33. And this right here would end everything. So just as I said, okay, we're still bullish. We just took out the high that I highlighted earlier, but that's nothing major. The best entry point after 7, which is right here. Remember we started at 1, which is this guy right here, and 7. 9 was our next bounce point. Then it went up and gave us 12, then 14, re-entry point, 18. 18 is also known as 9. It's the most volatile. Okay, 1 plus 8 is 9 in Vortex mathematics. That's why you got this guy right here. It's a reaccumulation point in the sequence that's currently generated. This is a perfect, wonderful learning curve for you guys who've been wondering, how do we generate sequences up into the future? And I'm teaching you right now. I don't generate sequences past 33. I don't. No matter how sexy the numbers are in the future, I don't. There's a reason behind that. There's a reason behind why I say I only need 33 people with this information in their hands. There's a reason why everything is done and at what date it is done. What is today? 26th January. We're about to close and head into 27th, right? Listen, nothing I do is random. Nothing. Everything is calculated, everything is scripted, and it's strategically placed so people who are of bright minds can capitalize on this information that I lay out every single time. And the reason is because not everyone should have this piece of data. It's uniquely ours. And the reason why it's uniquely ours is because we are what um, we are what the market would call the informed trading sect, the pack of the cards that the deckers, the dealers, when they deal these decks, what we usually would utilize is their very hands or their own script against them, the narrative that they try to present. We hone or harness a skill that keeps us at least closest to the margin, right? In expectation, I would say that we are not the market makers, but we try to be in sync with what the market makers are intending, right? So you have an opportunity to become the next generation of the card counters that would literally revolutionize this entire trading industry. Now there are countless things I am not teaching, even on the private group. There's a reason why, and I'll tell you why. It's because many people know how to parrot your concepts before you actually get to, explain it fully for people to capitalize on. It's really, really nonsensical, right? People trying to be you when they haven't even gotten them right. So that's the thing. Okay, that's why I have to retain some things. It's because I want my originality. I want to make sure that everything I do is timed, it's scripted, and no one can use my own information to say that I I kind of like um altered it. No one can come back to tell me that they altered my my system. I built this. No one Morpheus was never my teacher. He never taught me. Never enrolled in his class or anything. None of that. And the only mentor I recognized and actually paid for to be mentored by him is none other than, oh, he's I can't mention him. Yeah, I'm supposed not to. Um, okay. I think he actually teaches a different perspective completely to what I do. He does not teach anything in in line with CAD counting. He does not. He teaches me time and price and how to read the chart from the right hand side to the left hand side. A lot of you, from just that disclosure, you would know who I'm talking about. If you have been around the ICT community for some time, you would know exactly who I'm talking about. Okay. So we're right here on 23, and 23 did not give a re-entry or reaccumulation point. It missed it by one count. That's the plus one rule. Okay. So the plus one rule applies here. 23, instead of 23, it uses the number I taught you. So what does that mean? 23 is not among the sequence values I taught you. 24 is. 24 is on those numbers I gave you. So why does the market have delayed and hastened sequences? And how do we track them? Simple. We track them using the numbers of the original presented candle movement. the ones we know to be original, the ones that are the true values that these algorithm recognizes. And amongst them, when you see 23 amongst your generated sequence, what does that mean? It simply means that we're having a value that is completely lower than the sequence valuation that we're used to. So we have a sequence of 24 as the normal sequence or the natural sequence. But when we have a number less than or a number greater than, it means when it's greater than, that's a problem. That's the problem. Okay. But when it is less than it, it's also a problem. It should always land on 24. So when it hits here and here gave the retracement at 24, what does that mean? It means the movement was hastened by one candle. It was hastened by it. If it happened at 25, if it happened at 25, it means it was what? The movement was delayed. So now there you go. But if it happened as exactly 24, that's a good sign. That's to say we're in sync and time does not have to fluctuate going round and round and round, running around in circles. No. So rather, what vibration gave us here? Remember, to find this entry point right here, you would need rhythm. And you would know why rhythm is important. Because this curve took exactly 4 candles. So what do you expect? The next curve should give you your re-entry point at the 4th candle. And you would have gotten this entry right here. So rhythm of forward curves equating backward curves is applicable when you're reading price. This is the forward curve and it gives you the next forward curve, right? So that's a principle, one of the principles I taught in rhythm, okay? And so you see that we had this point right here to be the exact point when the retracement began. That's why we have sequences, guys. They guide us as to where to expect in this marketplace. Okay. So what would we call 14? 14 is not among the values, right? That we know of. 14 is not. And remember, 13 was just to express this point of volatility that came in here. I was trying to describe it and tell you exactly what that would mean. Okay. I really wanted to see that the 1 hour, right, would give me a smaller body because I would know that this candle will be so crazy as to hit this guy right here. But because the compression was not much, I don't expect the volatile or the expansion to be completely astronomical. I don't have that in my anticipation, but I don't know what the algorithm might choose to do on this candle. But one thing I wanted to see is that this guy right here should compress by far deeply. Remember, this is in a rhythm of 2, right? So if this was a smaller consolidation, it means the expansion to be expected is going to be far greater. And how I knew we were bullish was based on the 15 minutes time frame 6. And how I knew that we were actually going to have a sustained run is based on the rhythm presented here in this small candle count that we had here. So when you go down to the 1 minute time frame, then you have the drama session where everything else that you've already had planned out gets skewed because here is when the sequence governs your trading. 29 gave us the exact retracement point, which is perfect. I love that. So our generated sequence of 29 was good. Remember, our close is exactly a territory. We don't go past territory. There's a law and we stick to it no matter what. There's a law. There's a reason why we have laws and we don't break them. So exactly, it halted at exactly the sequence we generated. You think that's random? No, that's not random. That's mastery. That's mathematics. It means this thing has a soul. It has a life force of its own, and follows this principle every day, every single day. It doesn't break the routine. And these sequences are generated. They're not random. They're generated. And you guys have the mathematical formula already. Why did I choose this hour to mark it out? Why did I begin to stream at exactly 18 within this hour? Why? Those are the questions you should be asking. Why am I doing this? Why am I doing that? These are the things that when you put your mind to, they become the building block, the very building block of the system you would build. This guy right here, our next anticipated major point or decision point, or where our close of the movement would be, is on TED 3. And that's where we would end today's live session, guys. And FYI, I'm not I'm not saying I'm a genius. I still make mistakes about where to expect certain things. But in this sequence, this is the alpha. This is this is the best entry point since we began the generation of the sequence. This is the best entry point. Not the second on rhythm, but this guy right here, where 14 marked exactly the close. I wanted to see something. This is not something I see every day. Usually, what happens is that when we have 5, which is actually 14, right? 1 plus 4 is 5, right? When we have 5, what I usually see in a candle presentation, and I'm not lying, guys, I literally know the behavior of 5 at most times, right? But what I saw today is something that I'm going to have to screenshot later and write about, okay? This right here usually would be the most volatile of this entire count right here. 5 is it's a number, it creates a lot of change. But also in this scenario, it's a double of 7. And we all know what 7 does. Look at it. It chops, or it's extremely volatile. It's more almost the same as 9. It runs as wild as 9, but it's not always that way. Okay. So what do we expect when we have a presentation where we're expecting the sequence to pan out, give us weeks, at least run past this guy or hit this guy by a little before? But then BTC does not do that. Why does it stop exactly at the open of this entire 1800 and run up? That's the principle of time. And when you look at this guy right here, it aligns with exactly the sequence at what time? 1816. That's where I'm going to stop, guys. One thing is for sure, there was a slight change in my expectation. What I wanted to see was that this guy would push higher and be the entry, the re-entry point, aside from the first one that we had on 7, which is down here, right? I mean, down 7. 7 presented the first curve. So what I expected was that on the exact 14 candle, we should have a push higher, and we didn't have that. But we had the green though. I knew that it's the next bounce point, and I knew that it's a good opportunity to enter the market. But I didn't expect the body of the candle to be this way at all. And so these are the things that when I told you that you should do live tape reading, these are the things you would understand. And when they stop walking the way they used to, then that signals a new learning curve. Okay, that's a new learning curve. So we have 29 right here. Next is 33. And 33 gave us the re-entry point upward. But then again, oh yeah, this won't fail. This won't fail at all. But this is where we would put our X marks the spot and end everything. Right on this candle right here. This is 33 and the end of all sequence. The reason I use this system of trading is because the reason I the reason why I love to stop at 33 is because this is the this is the point I want to teach you. This is the point I want to teach you um to apply the this is what I want to teach you. The most simplistic approach will be to end it at 33. The reason why this is continuing is because of this black candle right here. And I can't explain that because that goes against the law of the agreement I had with my students in the group. Okay. So the reason why we have a continuation is because of the print that we see. And my students would see this exactly and know this is the model from Q4 last year. This is the model. And so many things within this are models. There are there are about I think about three models that I can see from this candle formation alone. Okay. And the reason why I close at 33 is because a lot of consolidation and choppiness occur within this region before when you get to around close to 40, then we resume again. But this is usually a very good place to go backwards, at least 7 candles. Find the last act, find the last curve, utilize that for future price projection. This point will give you exactly what to expect going upward, going downward, going upward, going downward. This is one of the places you will learn to define that. Are we continuing upward or downward? That's the point. And you closing your trade here is not weakness, and it's not a lack of or you being like low probability or low hanging fruit whatsoever, whatever they call it in this industry. You closing your trade on the tatted third candle is not bad. There is more to it to understanding the longer duration counts, the longer range of counts. But I don't want you to focus on that for now. I want you to understand that we restart the counts. The algorithm restarts at the tatted third candle. That's all I want you to get is that when you get to 33, you can look at new data from the past and try to get in sync with what is going to happen in the future. So you would start to reapply vibration from this point on. You wait for an arc to form after 33, and that would begin your new sequence generation. There is a way of continuing, but you have to use a different mathematical formula from the one I gave you guys. So that's it. Have fun with this information. Okay. Remember, the first time frame of importance is what? For scalpers, what is the first time frame of importance? It's the 4 hour. The 4 hour. My expectation for if we were gonna have a very lengthy run upward is that this candle should have been black. This one right here. But because of this volume right here, I'm pleased. Because all I was waiting for was to see the model from Q4 repeat itself here. That's what I wanted to see. So I would be like, hey, 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 hey. So the next candle we'll be trading will be 1900 and we'll have full pull. Would open it the first hour and wait until the fourth hour and close. And literally we'll be on point without any form of mistake. But hey, did we miss it? No. We went down to the 1 hour time frame and still read the same information and found out that if there is a consolidation at this point also, volatility is to be expected on this end. And this nature repeats. That's the joy of this. That's the joy of this. Every day you're presented with new nuances, new variations. And all you have to do is learn to read the flow. Six here was the determinant. And it only takes you 1, 2, 3, maybe 4 minutes to fully understand why I had to pick this. If you're my student, and so this is the last tidbit, and I hope you enjoyed our session together. And you see why we ended at a tree? Nothing happens randomly. So have fun with this information. Um, be very, very meticulous in your analysis. And remember when I thought, well, I know you guys see this and you know what I meant when I said you should end it at a tree. So have fun. And I think we'll do more of this, but more on a schedule time because I just felt like to do this and just opened my chart and started to read. So I just there are so many things I wanted to just speak out, like but I couldn't do it like in front of the whole entire viewers of YouTube. I would go against the agreement we had and against what I've strived so hard to make sure that you guys enjoy privately. So in any case, this was a fun run and we had a very good enjoyable session. And let's schedule more and get to have fun. This would continue within this year. I would throw in crumbs and also do sessions. So I would definitely do more videos in terms of teaching, but most majorly time dilation theory and nothing about CAD counting as promised. So time dilation theory is important for you. It's the building block. It's one of the things that helps you understand CAD counting a bit better than people who haven't had a very robust understanding of the system. And Morpheus was so generous that he thought most of what he did um, as a beginner in understanding time dilation theory can find some of the basic concepts or teachings of that on his YouTube channel. And you can find some really rich content there. You can begin there to understand why we have sequences. That's the only information you need there. Why we have sequences and how they are generated. And with that, I'm sorry for all the rambling and going back and forth, even though I couldn't teach everything publicly. I'm really sorry about that. It's not my intention to be cryptic, but I had an agreement, guys. So I'll do my best to talk more on sequence generation and try to get you up to speed on the nature of how we generate these things. But over time, I will make snippets and probably I'll just give you one of the mathematical system along the year. Hopefully, along the year, I might do that, but not all of my mathematical constants and principles will I teach. On sequence generation, I will not want to disclose that. So have fun with this information. Read everything I did. Um, cross check it, and where I made mistakes, please pull my attention to that. And don't be offensive because I don't take insults very well. It makes me just stop whatsoever I'm doing and just go back to my cave and just do what I do. And I could do this in my room for the rest of my life and not share this, and no one would ever come to find me. Someone actually from my I have two different groups. I have the advanced and the intermediate. Someone from my advanced group would not be happy I'm sharing this. And reasons being because they paid for this information. Okay. And why I'm doing this is because of the so many questions I get in terms of text messages. And so I hope for all of you who do time dilation theory, if you notice, none of this sequence were thought by Morpheus. None of the sequence he thought had these generated sequences. The sequences are generated. So is the nature of everything that we do in terms of time. Okay. Time sequences, price sequences, all of them are generated and they have mathematical formulas for them. Okay. So have fun with all you're doing. This was kind of impulsive. It was not planned. So forgive all of my mistakes and I hope to do more of this with you guys. Have fun and happy trading.